Hey, what's up everyone? Welcome back. In today's video update here for XRP, we are trading at 0.4551, 24-hour volume, we're down 20%, and market cap, we're up 0.59%. Heading over to our daily chart here, you guys, I am zoomed out. I don't know why I have two fixed volume indicators, but we're just going to leave it because I don't want to mess anything up. But essentially here we can see areas of resistance and then areas of support here on this line of the 0.438 going up to an area of resistance at 0.48489. So if we take a look at that area of resistance, essentially we've been in the bear market this entire time. If we take a look at our MACD indicator, huge strides with our MACD indicator. We are going into our next wave of our second trend. We do see this wave here peaking on October 20th and then continuing on in this bear trend. So long, again, we do see some promising decreases in the spaces between our signal line and our MACD line. Then we can finally say that this bear trend could possibly be over and another retest is going to occur near the 20 moving average, which essentially I love using as an area of resistance and an area of support, but most importantly, a trend reversal. So we can see here a rejection of our 20 MA here as well. And we can ultimately see all of these candlesticks getting rejected from the 20 moving average. So it is a known area of resistance. And if we're able to close above that resistance level, then it is going to give us a breakout into the uptrend. Now, notice too the blue lines here that we have, which is our Bollinger Bands. We have the upper one and we have the lower one. Notice that they are squeezing in. So it's going through a narrow channel, squeezing in here, and essentially it may pinch in the next couple of hours or so. And when it does pinch, it is going to initiate a breakout in an uptrend or a downtrend, depending on where price is. So if we're able to break out in an uptrend and actually close above the 20 MA, retracing to the upper band, then it's confirmation that we are breaking out in the uptrend. If we do remain below and heavily get rejected from the 20 MA on a daily average, that breakout is going to go into a downtrend. And if we take a look at our profile volume here, really there's not a whole lot of area of supply and demand that we can be able to fall to. So we can see a good chunk that is focused around this area of our dollar amount up to 50 cents all the way down to 43 cents here. If you're not known or if you don't know what a volume profile here is, it's basically how the volume works at the very bottom here. It shows us how many trades were done in time intervals, whereas the profile volume, it shows us in nodes how much trades occurred at that dollar amount. So those two combined would be able to show us areas of supply and demand where the price would want to retrace to. And these clumps will act as a good resistance turned into support depending on where the price is. So if the price does come down here and break out in a downtrend, we normally look at clusters where the price is going to go. And if I do pinch out a little bit more and focus in on some of the clusters that we do see on our volume profile, it's all the way down here if we can see this. So at the 33 cents. So that's almost a 10 cents drop, more than 10 cents drop from the current price right now. So hopefully, again, that doesn't really happen unless we see a huge crash with our momentum of the MACD indicator. And of course, a retest and break 100 moving average. So we definitely don't want to go into a downtrend. Areas, again, for support where the price, again, might want to lead to is going to be here on our line at the 43817. If not, then we can always rely or we can always double check our next area of fib here, which is going to be the next area of 41 cents. So let's head over to the 4-hour time frame. And again, I am zoomed out here to see an area of supply and demand from our volume indicator. And we can see this really good chunk here right about these nodes here at the 45 to 46 cents, and then these two nodes that are sticking out here, because this is going to be a good area of support in these two nodes. And then we're going to take this section up here because this is going to be treated as a good area of resistance. So now I'm going to zoom in and take a look at the current chart that we have right now. So this area, again, if the price does move away from this area, it is going to come up to the next area and treat the outskirts either at the very top as a resistance line or at the very bottom as a resistance line or an area of support. So we can already see some of these nodes here sticking at the very top and then coming down into the next phase. And again, at the very bottom bottom here, this is going to be our area of support at the 44.52 to 44.86 here. Now, if you already noticed comparing our previous candles to this candle here, I'm using high Kanashi candles that shows us the current trend. It's easier if you use this opposed to the actual candlesticks where it's just very sporadic. Changing it to high Kanashi would actually show you the current trend itself. So whenever the price is pumping and it's going up, it's green. If the price is coming down, it is red. And if we take a look again at the current price right now, it is very sporadic as we can see. The parabolic SAR is a good indicator too to use with high Kanashi candles because it shows us if the dots are at the very top, it shows us that the trend itself is a selling trend. Normally, if it's at the very bottom, it triggers, more of a bull trend if we do follow the rules as well when we pair these two indicators together. But if we take a look at the parabolic SAR, it is showing trend is coming down. Now we see a lot of these candlestick wicks at the very top here. So the ranges are very sporadic here. The price itself can definitely come down and reach this area of supply at 44 cents 44.52 to 44.86 here. Okay. That is going to be relying on the area of our MACD indicator. So our MACD indicator shows a crossover of a buying opportunity. Again, if we take a look at each prior buying opportunity here for our MACD line, we can see that it grew in this section. It's getting smaller in this section, and it could possibly just get smaller in this section here. So the uptrend that we're getting in momentum for our MACD indicator isn't as strongly as we actually want it. The RSI here, again, in these clumps, we're seeing smaller peaks. And if we do see smaller peaks here, essentially, we're not going to get that burst. We're not going to get that uptrend, and we're not definitely going to get that breakthrough that we want. If we do kind of see here in this area, it did trigger a buying opportunity. However, normally whenever these buying opportunities occur, we'll see the K line accelerate upwards. However, we do see the K line in the previous action here move sideways, and we can almost predict that the K line is moving sideways as well, and almost kind of say that it's going to move downwards and trigger a selling opportunity. So just be very cautious with that. In the 2-hour time frame, I'm going to change it to candlesticks here and see if there is any opportunities that we can see. I do predict, again, price is going to come back down here to the 44.52. We do see this candlestick here. I don't know if I can delete. Okay, we can see this high candlestick here at the very top, an exhaustion of this uptrend, hitting resistance again. And we see the MACD indicator a little bit lighter in the green color and this engulfing candlestick in the red. Okay, we can see here as well, triggered a selling opportunity too. So these facts combined, we are most likely going to retrace downwards. And again, we are going to be using here as a good area of support at the 4486 or 4452. So that is my video here, you guys, for XRP. Let me know what you think down below. Like and subscribe to the channel as well, but I'll see you next time. Bye.